Hello and welcome to Zee Commodity Capsule. Gold prices are once again in spotlight with its record-breaking spree, not just in international but also in domestic markets. The December delivery, we have seen gold prices coming very close to its new all-time high of $3,700 an ounce. And with this, we have seen year-to-date, gold prices have surged more than $1,000, while in percentage terms, it turns out to be nearly 39 to 40% of rise so far this year. As far as domestic markets are concerned, on MCX, gold prices have surged to 1,10,000 rupees for 10 grams of gold, and we have seen similar kind of gains happening, tracking its benchmark prices in international markets. Now, clearly, a couple of reasons which are helping yellow metal gain. One of them happens to be the growing bets on Federal Reserve interest rate cut, which is due next week, along with weaker dollar. Now, dollar index also has slipped below 97.5 mark, which happens to be its 7-week low. Safe haven flows into gold increased in the face of fresh political crisis in France, along with political uncertainty in Japan after PM Shigeru Ishiba's resignation. Prospects of more US sanctions against Russia followed a deadly weekend strike by Moscow against Ukraine also contributed to bullion safe haven demand. Now, investors are awaiting the US PPI and CPI data, which is due later this week. Copper prices, meanwhile, have climbed across major exchanges on Tuesday, supported by weaker dollar and tight inventories globally. 3-month copper on LME has edged to stay above $9,900 a metric ton. We have seen that China's import of copper concentrate increased for second consecutive month in August, boosted by higher exports from a major Indonesian mine, which aims to ship up to 90% of its 12.7 lakh ton quota by September 16th. Meanwhile, we have seen copper inventories on LME registered warehouses also dipped to close to 1,55,000 tons. Oil prices have managed to extend their gains for third consecutive session on Tuesday after OPEC Plus decided to increase production by less than what market had originally expected or anticipated, while concerns over tighter supply due to potential new sanctions on Russia continue to lend support. With this, we have seen Brent crude prices have extended gains to trade close to $67 a barrel, while WTI crude is hovering just near or rather we can say below $63 a barrel. US Federal Reserve's Federal Open Market Committee meets next week, and traders see a nearly 90% chance of a quarter-point interest rate cut. Malaysian palm oil futures is also where you need to keep your eye on, because currently the vegetable oil is hovering close to 2.5–3-week highs. It's extended the gains for third session on Tuesday, tracking gains in edible oil at Dalian futures. Now, market participants awaited cues on inventory and demand from the Malaysian Palm Oil Board data, which is due on Wednesday. Prices are hovering close to 4,500 ringgit a metric ton. Malaysia's palm oil inventories are forecast to rise for a 6th consecutive month in August as production continues to outpace exports despite a recovery in demand.